The last few months brought some respite for the central London housing market. The sales market saw prices rise for the first time in 9 months, and transactions, which had halved in the second quarter, edged closer to 2015 levels. The lettings market continued to suffer from an oversupply of stock, but signs are that this is being slowly absorbed. But first, let's look at sales. 2016 was a strange year for central London. Distortions surrounding the 3% stamp duty levy and the referendum impacted sales volumes throughout the year. By the fourth quarter, we'd started to see activity returning, as those who'd been putting off the decision to buy became impatient and started to see value in prime postcodes. We saw a welcome increase in activity, with the number of properties sold in prime central London just 11% lower than in 2015. A significant improvement on the second quarter, when transactions halved. The fourth quarter also saw prices increase for the first time in 9 months, with all 3 prime areas recording increases compared with the previous 3 months. But increases in the fourth quarter were not enough to counter earlier falls, with achieved prices in prime central London still 3% lower than they were a year ago. But there were few forced sellers in prime areas of London, meaning relatively low levels of new stock reaching the market since April has acted as a buffer to any significant price falls. At the end of the fourth quarter, there were just 2% more properties on the market in prime central London and 10% more in prime London, compared with the same point last year. Following rapid price corrections, buyers appear to be seeing value at the top end. Sales over £5 million were up 29% in the fourth quarter compared with the same period a year ago. In contrast to the sales market, the number of properties let remained buoyant in 2016, but increases in stock have put pressure on landlords' expectations on price. Prime central London seeing a 3.3% fall in achieved rents over the last 12 months. In the fourth quarter, there were 14% more properties let across our 3 prime areas. But in terms of new stock reaching the market, by the year end there were 11% more properties listed in prime central London and 30% more across the rest of prime London compared to the same point a year ago. There are a few reasons for this. Firstly, the introduction of the new 3% stamp duty levy concentrated buy-to-let purchase into a small window in February and March. And in addition, a rise in reluctant landlords, and in certain pockets of London, an increase in new developments completing has all added to stock. The glut of buy-to-let properties from early in the year are being absorbed into the market, but new development completions and their impact on the rental market will be something to watch in 2017. Looking ahead, there are many unknowns which could impact the market. Closer to home, uncertainty surrounding Brexit continues, the triggering of Article 50, the next milestone in our extraction from the EU. Further afield, there are a number of key elections in Europe this year, and it's anyone's guess as to the impact of the Trump administration on the US and global economy. For the prime markets, our latest LonRes survey suggests expectations for growth in 2017 remain subdued, but a busier fourth quarter does suggest that it could be a better year than many are expecting for central London. We'll keep you posted. Thank you for watching.
Thank you.